Watch this video, guys, if you want to learn about my gold blueprint. If you're a trader that's looking to learn how to capitalize on gold effectively throughout the day, you're gonna want to learn this blueprint that I made on gold. This is actually in one of my blueprints on Discord. So we're gonna start it off with how to draw the $10 levels on gold effectively and quickly yourself. As you see here in Discord, I have some blueprints that talk about why whole numbers matter on gold. So in this video, we're also gonna break down some key little points on why whole numbers are important. As it says in the blueprint, gold reacts very well to whole numbers, round price levels ending in 0, 25, 50, and 75. These levels are often where institutions place their orders, and they pretty much serve as key support and resistance areas. So it's one of the reasons why they matter. Gold is also a very high volatility pair, so whole numbers provide psychological price points where traders naturally set orders, whether that's buys, sells, stop losses, and take profits, where people even exit the market. So they kind of also act like a magnet for price, because price can be drawn towards them. People will exit and enter. Both buys and sells will happen at these whole numbers. So you'll often see, one thing to note down, because we're gonna go over this on the charts as well and talk about this, you'll often see price bounce or reverse at these zones. So common whole numbers and examples would be like 2600, 2625, 2650, 2675, or 2700. So there's different types of ways to draw the whole numbers. Number one is every $5. Number two is every $10. Number three is every $25. So we have different ways we can draw our whole numbers, even on cryptos and some currency pairs as well. This concept also works on currency pairs. I used to use it a lot back in the day when I started trading currency pairs. So I'm also gonna make videos on this exact topic on currency pairs as well. But we're just gonna stick with gold and talk about how to draw the $10 levels and start analyzing the psychological levels on your chart. So what we're gonna do is we're gonna go to gold right now, and we're just gonna get a blank chart. For instance, we're on the 4-hour time frame here with XAUSD. So right now we're on TradingView, guys, and we're gonna keep it pretty simple, but simplicity is effective with this strategy because these whole numbers really matter. I actually did a live stream this morning and we caught buys on gold because we were buying at 2870. That was part of the analysis this morning, and I did a trade breakdown. So this is a very important topic. Once you get used to drawing it, it becomes pretty basic for those of you guys that are new. So for this blueprint for drawing every $10, guys, honestly, all we need is 2 tools on TradingView. Obviously, we got our XAUSD chart. I'm on the 4-hour time frame right now. Honestly, all we need is the horizontal line. That's what we're gonna start with. And then our second tool is gonna be the rectangle shape. We just need 2 tools to do this and draw these zones effectively. People always ask me, Evan, how do you draw the levels so perfectly? You know, how do you draw these levels? How do you draw these levels? I'm gonna show you guys a lot in the inner circle how to draw these levels effectively and in different ways and how to utilize them, all right? So let's start off, for example, we're just gonna put a horizontal line at 2950. Why 2950? Well, when we're talking about every $10 or zeros, right? Look at how the price ends. It ends in zeros. So it's a rounded number. It's not 2151, 2948.192, or 2949. It's 2950, 0.000. So when we're referring to round numbers, that's what we're talking about, a number like that. So all we're gonna do is put the next level $10 lower at 2940. And then we're gonna continuously do that downwards on the chart. And we're gonna go $10 equally. All you gotta do now, so if I'm grabbing the horizontal line, let's say. So I'm taking the horizontal line, right? And I know I got 2950, 2940 marked. If I go 2930, I'm gonna try to get it close as I can to 2930. Right there. Got it as close as I could to 2930. Now, I'm gonna double click the line, or you can do it on your laptop with like Command Control some buttons on your laptop, I just double click, right? And go to coordinates right there. Boom. We're just gonna zero it. We're just gonna make it $10 equally. So each line is an equal distance of $10 apart from each other. And I'm just gonna go down the chart and continue the process. So I'm just adding my horizontal lines. Again, I'm going close to where I can see the zeros, and then I'm just kind of fixing it with the coordinates. You can save this as a template as well. Like, it's saved on the chart now. Like, I could just leave these here, close my laptop, open the chart, it'll still be there, right? So you don't have to remove these all the time, and you don't really want to do that. And I'm going to show you guys a little trick as well to help with this towards the end of the video. Now, all I'm doing, again, this is just for practice, right? I've done this thousands of times, hundreds to thousands of times. So like, I've done this a lot. You're gonna do this. There's times where you can remove the drawings, redo it. It's good to just have them stand still on the chart. Why do I say that? So you can see the reactions. So as we go forward, we're gonna be talking about how these whole numbers tend to react. I'm gonna show you guys this in this video and other videos, because I mentioned here, you'll often see price bounce or reverse at these zones, kind of like a support and resistance. So these numbers that we're drawing on the chart, a lot of buyers and sellers can come at and around these numbers. Price tends to react at these numbers when you're studying gold on a daily basis, a day-by-day basis. $10 isn't really a far distance for gold. It's pretty volatile. All right, so we have a bunch of $10 levels marked. I'm gonna go to the 1 hour chart now. I'm gonna step down from the 4 hour and just go to the 1 hour now. And this is where I'm gonna start to draw my rectangles. Now, all we need to do is draw one good rectangle. You don't need to draw, like we just drew 10 lines on the chart here. You don't need to draw 10 rectangles. So you just gotta focus time on drawing one good one, one decent one, not too big. I'm gonna show you. I make them pretty narrow, like my eyes, and I'm just used to doing this so many times over and over again. I think you'll find a size that is pretty measurable to you. I think what I do here is about 50-ish pips for a zone, right? I'll mark the whole number, and then I'll create the box, basically the area around that whole number. So you can see here, I have one rectangle. So when you grab the rectangle tool, you can, let's go up on the chart, blank canvas here. You can move it any size, right? You can make it a big square, you can make it really thin, right? This is the rectangle tool. You can place it, and what we use it for is to basically create areas around these prices, or zones we call them. Some traders like to say zones, some traders like to say areas, like support and resistance areas. All right, so here we have one box drawn. So what we're gonna do is we're gonna kind of do what we did with the line chart. We're gonna go back to the coordinates. We're gonna go on the box and we're gonna click it, and right here we have coordinates. As you can see, we have a minus and a positive one. Notice how the first column has a negative 26, whereas the second column, it just says 347. So what we're gonna do is we're just gonna stretch these numbers out as far as they can go. All right, so they go left to right. Just spam this. You saw what I did there. I just literally went 8 on my keyboard. So this stretches them all the way. Now it's left to right, fully across the chart. All right, so I'll do that again. I'll do one more recap of that. I'll remove it. So we're starting at 29.50. That's a zero level. So like a $10 or a zero level, we would call that when it comes to whole numbers. We're gonna take the rectangle. And again, all we need to do is draw one good one. Not too big, we wanna make it narrow. Narrow is how we wanna make it. It doesn't wanna be so thick, okay? Because when you go on smaller time frames, if you draw it too big on a big time frame, when you go into smaller time frames, it's gonna look even twice the size. That's why I stepped down from the 4 hour to the 1 hour to draw the zones. You could even step down from the 1 hour. You could even go to like a 30-minute once you get a little bit better, or a 15-minute. But notice what I did at the beginning was I started in the 4 hour and then I stepped down to draw the boxes on the 1 hour. I like drawing the boxes kind of on a smaller time frame, going smaller because it keeps it relevantly like in that size for that time frame. It doesn't get too big. If I start drawing on a 4 hour, it might come across a bit bigger when you go to like a 5 minute. So there's one good, that's a good size right there, right? That's about 29.47. 29.52. So that's about a $5 distance, right? In between, around the price. So again, I'm gonna show you guys that little trick one more time to make it go extend from the left to the right. We need to go again the minus. You can just maximize this number. I just typed a bunch of 8s. I'm gonna do the same thing. I'm just gonna type a bunch of 8s. And it will stretch that zone from left to right. So I say we only need to draw 1 because we can clone it. We can basically copy and paste that one, clone it. That is the term they have on TradingView here. So on TradingView, let's say if I go to a shape with my mouse, so I got my mouse here, and I go to that shape, I can clone this box. I can also save it as a template. So it keeps that same exact size every time if I want to load it up. But real simple, how we're gonna start this off is just by learning how to just quickly clone it. So all I gotta do is go here, kind of on the box, anywhere where I can just grab the box, clone. And then I'm just gonna drag it down real quick. Clone, drag it down real quick, clone it, drag it down real quick, and continue the process until we're done. Remember, you really, like once you get good at doing this, you really just need to do it once and they stay in the chart. Repetition for you guys that have never done this will be kind of the key in the beginning. Maybe practicing it, practice doing it. But realistically, it might seem like, oh, we're doing a lot right now, but these can just stay in the chart. Or day by day, like you can re-add them day by day. When you're done your trading day, you come back on the charts, you can start to re-add them, analyze them. Guys, like you can change the colors to anything you want on style, like blue, red. You can make the zones any color to your preference. Right now I'm using green. I might change them up. Like sometimes I like to change the colors up, but right now I'm just using these green zones. So that is how we draw the $10 levels on gold. Let's say you don't want these things to move at all. Like you just want them there permanently. You can lock them. Same thing, what we're gonna do is right click or left click on your laptop. I'm on a Mac, so I'm using 2 fingers to do this. That's pretty much if I was like on a mouse, left clicking or on the mouse. Locking it permanently just keeps it in place. And you know, maybe that's the thing, because I remember back in the day when I would do this, it would kind of get annoying if I would move the zone. I'd be like, and I'd have to just kind of move it, redraw it. So like if you're doing analysis, it doesn't move the zones. It's nice. So that's a little thing as well. You can do that. I don't always do that. But if you never want to just take them off, like if you just want them permanently there, then that's the thing that you could do. Now we're going to be talking about the $25 levels real quick. And we just talked about the $10 levels, right? And we're going to do different variations of this. We have to talk about the $5 levels. I have to show you guys a different way to draw the $10 levels using the $5 levels. All right. So every $25, that's another way to draw key price levels on gold. Now these are going to be more looked at as swing levels, because the market is not going to be at these levels as much. So if we're going to go every $25 on gold, let's start at a number like 3,000 here. What would $25 down be, right? That would be 75. The market hasn't hit that yet, but this is just an example of putting the horizontal lines every $25 for the price of gold. Let's say if I was starting at $3,000, $25 down would be $29.75. This is known as something called the quarters theory. I'll drop a PDF for you guys as well on the quarters theory topic. I've even shared the YouTube videos that I seen a long time ago to learn this topic, right? Quarters theory is when you're breaking price down in equal quarters, going 25, 50, 75, 0. It'll be like going from $1 to $1.25, $1.50, $1.75 till you reach $2, right? You have that distance from $1 to $2, but you can break it down into 4 quarters. This is what the concept quarters theory goes over. And when we're talking about the quarters now, so that's every $25 on gold, these act more like swing levels. Why? Because again, the market is not going to be at these levels as often. So if we look, for example, we can see recently the market was at 29.50 and we've had a huge drop down on gold. It looks like it came all the way down to 28.50. So right here you can see at that 29.50 level, gold had a huge swing sell-off and it came all the way down to 28.50. So that's a $100 movement right there in price. Now look at the types of movements that come off of these levels. They're bigger levels because realistically, the market was at a quarter here, which was on February 6th. The next time it came back to that same price was on Friday this past week, the 28th. We could see the market was touching this quarter not that long ago as well on the 20th. So the distance between these levels is quite far apart, but we can add more here on the chart. We have 28.50, 29.50, so you have to go down $25 to 29.25. And then our next quarter is going to be 2,900. And then our next quarter is going to be 28.75. Same thing we did with the $10 levels. We can clone our rectangles and place it at the levels that we drawn, our support and resistance horizontal line levels. Same idea with the $10 levels, but this is more swing. The market's not touching these levels a lot. But when we talk about, let's say again, support and resistance, because that's one of the reasons why, again, whole numbers matter. They serve as key support and resistance areas. So let's just take a quick little analysis here on gold and see what we can see from these quarters. Look at 28.75. What do you see? You see a resistance formed here. What do you see when price comes back? Another resistance formed. What happens? Price breaks out. It pulls all the way back to that same level. There you're literally getting resistance turning into support. You see rejection up here acting like a resistance. You see that same level, the market comes back, it ends up going through it, doesn't hold it, dumps down. But when we come back to it, notice all the support here that eventually the market breaks, turns into resistance. If you really look at this chart, you can see a lot of different reactions here at these quarter levels. If you really look at every time, every single time that price touches one of these levels, you can actually see reactions all in here. If you look at all these other times as well, you can see a lot of reactions and movement off of these prices. Now these can act as bigger movements. We're looking at a 4-hour chart right now and it's easy to see these. The chart's not so small, the zones are pretty far apart from each other. Right now we're on a higher time frame and we can see there's bigger movements that can come off of these levels. So when it comes down to every $25 on gold, aka your quarter levels, remember they act more like swing levels for the market. So we have a chart here on gold with every $10 marked starting at 28.40, going up to 28.50, 28.60, 28.70, 28.80, and so on up to 28.90. Now, there's a lot of reactions and a lot of different reactions that happen at different prices here that could have been used for scalping or even longer term entries, depending on which side of the trend you were on and what time you were actually on the market. But when we're looking at just price itself, we can see price can serve as a place where buyers can come in, right? Like at 28.40, you can see right now I'm on a 30-minute chart. And look at the movement that happens here. The price goes through 28.40 and then it has this big green candlestick that pushes up. Where does it go? 28.50. So we can see a price reaction here. We can see candlesticks closing bearish around that 28.50 on the 30-minute chart here, right? So we have 28.40, price pushes up, engulfing candlestick, next candle goes up, but then at 28.50, price starts to reject and it goes back down to 28.40. Now at 28.40, it's testing this low, basically, right? What do we see at 28.40? A rejection. And then the price goes up and it trades all the way up to 28.70. So when we're looking at the idea of like serving as a support and resistance, you'll see it every day on the chart, every other day, at different times of the day, where you have these types of like support and resistance reactions. You may even see like price just have these bounces, quick reactions, right, at these zones when they first come to them. You can wait for candlesticks to close at these zones. For example, like you don't have to buy right when price touches the zone. You can wait. You'll get used to seeing price more. Like I'm really good at knowing like and understanding the market, so I'm more comfortable with, you know, certain situations that maybe you guys aren't as comfortable with as a trader in the beginning, because you don't have as much practice watching price, analyzing price, seeing these things play out. But all you need is these lines on the chart to understand gold. If you keep these lines, or even the $25 levels, or even the $5 levels just on your chart, you'll learn a lot about the price reactions on gold. You'll see a lot of them. And they're not all huge moves, but they're reactions in the time that the market's literally there a lot of times. Like when the market's at a price, a lot of times there's reactions, like a support. The market goes through and it continues trending. It pulls back, it's kind of in that zone, goes down all the way to 28.40. But look at what happens at 28.60. So this is key right here, right? Not every reaction is perfect, but look at what happens at 28.60 here, right? You come back to it, you're trading above it after the market hit 28.70. You can see around 28.70 there was a big spike up, wick, that went up, but then the market comes back, closes bearish, goes back up, more bearish candles, comes down to 28.60. Reaction off the 28.60, comes back to 28.60, goes up. So if you look here, there's like a familiar thing that can happen sometimes where you get a reaction, price comes back to that price, reacts again, like a double top, or you get a reaction, price comes back to that price again. You get a reaction, price comes back to that same price again. If we zoom out, no, we'll just keep it at that. All right. You can cut that part out. So you can see as price, like if we're looking at gold here now, with where price is at. Let me remove these. All right, so if we're looking at gold right now, we can see throughout the last couple of days since last week closed, the market has pushed up. Were there any opportunities in there that you can spot or maybe notice using hold numbers? For example, anybody who was on the live stream this morning, as I'm recording this video, it's nighttime now, we caught buys this morning on gold, right? Can you look at this chart since price has been going up and see one, maybe two setups using the hold numbers where price reacts at the hold number on the 30-minute chart here? So right now we're just on a 30-minute chart. Can you see any candlesticks that have a reaction as price is going up? Because we can see where we are now, but prices come up all the way to here. And if you're on the live stream, I called out buys right here at 28.70. So you might be able to see one setup, and that's actually the setup, the clearest one for me. One of the clearest ones is the one that we literally caught this morning on the live stream, 28.70. You can see gradually as price has gone up, each whole number is kind of like a barrier. It's like a floor for price, right? Price is going in the upward direction. It makes a high here, right? It makes a low here at 28.40, and it punches up to here. And what does it do? It comes back and it holds that 28.60, and then it keeps going up, right? It even holds it again. There's two reactions at 28.60, and then we go up, and then we come back to 28.70. And look to the left at 28.70. When we zoom out, there's even support here, some confluence in the market. The market's already going up, like the market direction's going up in structure. Look at as price goes up at 28.80. What do you see at 28.80, which is would have been above where we were this morning? On the stream, I called it a buy, said I was entering at 28.70 this morning, and the market ran up through New York session, and then it pulled back to 28.80. So you could see just on this chart, not including like the sells, look at the buys, right? As price is going up, the buys start down here at 28.40. Price pushes up, retests 28.60. What's also to the left of 28.60? A previous structure, previous support and resistance. What does price do? Pushes up, 28.70. So there's 3-4 buy setups here. There's a couple of buy setups where you might have been able to catch maybe 28.60 entry, 28.70 like we did this morning, or even 28.80. If we're talking about rejection candlesticks, that could be like a confirmation candlestick, waiting for a candlestick to close. Like look at 28.80 for example. You see price pushes down. What does it do? It closes a bullish candlestick. Next candle pushes up. What happens at 28.70? Bullish candlestick. What does the next candlestick do? It pushes up. What happens at 28.60? There's a bullish candle here, but then a big engulfing candle. After that, it retraces and it's gone. Even to the left of that bullish candle, market starts to go up, acts as a support here. Right? If we're looking even back here at 28.40, bullish candlestick, what does the market start to do after that? So that's rejection candlesticks, which you'll often hear me talk about, and you'll see videos inside the classroom and in the inner circle on that topic. So literally guys, whether it's $10, $5, or the $25 levels, we're doing $10 in this example, you can literally see support and resistance, that dynamic of how these areas serve as support and resistance levels, because it's often where institutions place their orders, all right? So this is why they matter. You'll see this a lot. We can go to any point of the chart and see a lot of reactions at these price points. If you guys want to have access to videos and information like this, including all my other blueprints on gold, they're all inside of my private inner circle. Remember to like, subscribe, comment on the videos. I'm streaming every day on YouTube throughout the week. You can catch me there.